Whitney with real... Bloopers are always the funnest thing in the entire world. Hey guys, Whitney with Mosaic Real Estate. I'm with Kyle. I don't know how to pronounce his last name.
Rohrbaugh. Land goes roar and sheep goes baa. That's what my grandma said.
Okay. What he said. And we are going to talk about buying multifamily homes with your VA home loan.
Mm-hmm.
It's going to be a really candid conversation, but one of the things I'm really incredibly passionate about is letting our veterans know about this benefit, because of the fact that when I was active duty, I called up my parents and I said, hey, I would like to purchase a house. Can you help me? So I didn't know anything about it. I was 22 at the time.
Mm-hmm.
And they're like, yeah, how about we just buy the house and you pay the mortgage and you can charge whoever you want, however much money you want. And I said, that sounds like a great idea. So
you didn't even know you had a VA benefit.
I had no clue.
Okay.
Yeah. I knew about it, but I thought VA, that I had to be out of the service in order to use it.
Yeah.
So I worked side by side with a real estate agent, helping do the whole entire process. They were just basically signing on the dotted line. And she claimed, I was at Travis Air Force Base, and she claimed that she was a Travis Air Force Base expert. You know how we have a lot of JBLM experts and stuff like that, but not once was she like, hey, why don't you try and apply and use your VA home benefit? You have a guaranteed income coming in. It was 2009, so it was right after the huge crash. Prices were very cheap.
Right.
And I also told her, oh, I'm going to get a bunch of roommates and they're going to pay my mortgage, and then I want to buy again and build this like real estate empire. And she didn't even mention like, you know, you can use your VA home loan for multifamily.
Mm-hmm.
Let's talk about that option. So I feel that if I would have known that information when I was in E4, still active duty, the trajectory of my life would be so incredibly different.
Have you done the math on what a multifamily purchased back then would be worth now?
I was curious, so I did pull up the fact that in 2009 there was a quadplex, so 4 doors, that I could have purchased for like $619 in California. And I looked at the price now, and it's worth $1.1 million. And I personally paid $900 for rent in a 1-bedroom, 1-bath, really shitty apartment back then. I can only imagine those units were 2-bed, 1-bath. I can imagine that I would have been able to get maybe $1,500. But you know, with inflation today, if I would have held on to that, I'm pretty sure that would have probably been paid off already.
Right. Yeah, a mortgage is one of the best inflation hedges because you get to pay back a fixed debt over a long period that doesn't change in its cost, but you get to pay it back with dollars that are increasingly less valuable. So as an inflation tool or a hedge against inflation, mortgages are amazing.
100%. So based off of my personal experience, one, that I didn't even get a chance to even learn about my VA home loan. So that's why I specialize in it now. I've used it twice now. And 2, I just want to be able to shake anyone and basically just give them the education. And that's why we're doing this video of please consider it. If you can afford it, if you can, if this sounds interesting to you, if you're only going to be here for 3 years and you are going to a different base, why not build up that rental portfolio now and help with retirement? What are your thoughts on that?
So the VA home loan is my favorite way to finance homes on planet Earth, and it's for a few reasons. Obviously, it's 0 down with no mortgage insurance. The qualification is very flexible. It is an incredible tool to be able to acquire real estate when you have that benefit. There's a lot of other things that are true about a VA loan that are limited by other types of loans. One of the most unicorn factors about a VA home loan is its ability to go 0 down on a 2, 3, or 4 unit residential. The moment you get up to 5 units, the mortgage world, and we might talk about our 6-unit question, but the mortgage world counts it as a commercial property. But multifamily, 1, 2, 3, 4, any other type of financing forces you to put a down payment down on a 2, 3, or 4-plex, and to be able to go zero down. If I could go back to my 22-year-old self, who my 22-year-old self happened several years before your 22-year-old self, I would
I don't know about that.
get in my DeLorean and I would go back and I would grab him by the collars and I would say, sign up, enlist. Now, I would also say buy something that has a rental income component, but I wouldn't have had the ability to go zero down on that. If you think about it in terms of rate of return, if you put real estate is cool because it's a levered investment. So I get to put down, 5% on something worth 400,000 and that's 20 grand. If I could put that 20 grand in the S&P 500 and it makes me 10%, good for me. That's $2,000 in a year. But if I put that into a $400,000 house, I get the appreciation on the whole asset. And so if it appreciates 5% per year, which is very normal for real estate these days, conservative even, it was 7.3 last year nationally. And it was 18% during COVID.
26% here in Puget Sound.
26% here in Puget Sound. So you imagine just a 5% return, that's 20 grand on my 20 grand investment. That is a 100% return on my investment. If I put down $0 on a property, then the rate of return is technically infinite. I mean, it goes up dramatically because I'm not having to invest. And so the beauty of a VA home loan zero down on a multifamily is that you cannot create that kind of investment return through any other financing vehicle.
No, not at all. Not even FHA and USDA. USDA, I don't even believe you can even do.
Right. They don't like income producing properties. Yeah.
100%. Yeah. So let's go over the definitions of house hacking. So there's the single family home that someone has built a DADU or an ADU. DADU is detached accessory dwelling unit. I'm seeing that everywhere. It's really popular. Homes, especially in Tacoma area, are taking part of their lot and building 2,000 square feet and renting it out for either multi-generational living for older parents or elder kids. And so that counts as a house hacking opportunity that you could just do with a single family. And then there's duplex, which we like to say in the business, 2 doors, because there's 2 front doors to get into the unit. Triplex, 3 doors, and then quadplex. And then there is an opportunity for our veterans. It's not widely talked about, is if you are 2 veterans going in together, you can get up to 6 doors. But there's some stipulations with that. You want to?
Yeah, there's they make mention in the VA guidelines. I've been doing loans for 20 years and I've never seen this done before. You actually pointed out this guideline to me. So one of the best things about this business is that no matter how long you're in it, you still learn something every day. And you're like, hey, you can do 6 units if it's 2. And what I actually sent that to my underwriter and I'm waiting for her to research it. But I will be really thrilled if it comes back and she says, yep, we can do that. They say a business unit, and so that's what I don't really understand what those guidelines mean. Sometimes we find that VA loan guidelines are written not to address everything, and they leave some leave some to lender or investor interpretation in terms of how those loans are done. Just because the guidelines say something, we still have to make sure that we know the path to get that loan funded. But that is one that we're going to figure out. So
definitely. So from my understanding, and if you are looking it up, and I will put it right here in the video, basically the guidelines say that if it is 2 veterans with 2 entitlements coming together, they can get the quadplex, but then also have a business attached to it. So say it's bakery downstairs that they're going to run, and then they each need their own dwelling unit itself.
Have to live there.
And so that's where we're coming up with it being a sixplex with a business opportunity. But we'll make a special video once we get way more information based off of your underwriter's guidelines.
We will be the first person I've ever met to close one, so we'll try it.
We'll do it, yeah, for sure. There is part of a guideline that says for qualification that you're going to have 6 months of reserve. Can you elaborate further
Yeah,
on
so
that?
what the guideline is attempting is to make sure that when you become a landlord in a fourplex situation, you're going to have, you're going to be responsible for the entire bill, and then you'll have these other units that you're renting out. And you don't always have someone, paying on time, or you don't have someone who, maybe you have a turnover or vacancy for a month, or you're going to take some time and fix up one of the units to rent it for more. And so what they want to make sure of is that somebody's got some post-closing reserves, and the guideline is 6 months. So you take the payment times 6 months. If the payment is, $5,000 a month, then that's $30,000 that you have to show in post-closing reserves, which is just a good idea anyway. You shouldn't buy a house and have no money to your name after you buy it. You should have some, I always say Murphy inevitably knocks on the door, and when he knocks and wants money, it's nice to just give him a check and make him go away. And he's therefore just a nuisance, not something that makes you go into more debt or borrow from credit cards or not be able to address the water heater that needs to get fixed. So the post-closing reserve guideline is 6 months. That can be from a TSP. It can be from other retirement, investment, savings, checking. You can sell something to get into 6 months. If the 6 months reserves has been seasoned in your accounts for 2 months, they don't really care where it came from because they just count it as your money. Mm-hmm. You cannot use gift funds or borrowed funds unless it's funds borrowed from your own TSP, let's say. But you do have to have some money post-closing in order to close on a multifamily if you're going to use rental income to qualify. If you have enough income where you don't need the rents of the other units, they give you the appraiser's opinion of the market rent or the actual rent, whatever's lower. And if you don't need that because your income is so awesome, then you don't need the reserves. But if you're going to use rental income to qualify, which most people need, then that reserve stipulation comes into place.
And then just to clarify for you, this is not a down payment. It's just to see in your bank account at closing. It's not because they're probably going, well, wait a minute, I thought it was a zero down. So this is clearly just to
show savings.
Yep. that you have it just in case of oops, you can't get someone in there. You briefly just mentioned that you can utilize the other units to supplement your income to qualify for more.
Yep.
Let's go.
Yeah, so this is another really cool. You can do this on an ADU, attached or detached, as long as it's a permanent ADU. You can do it on a duplex, triplex, fourplex. Most types of loans will let you do this. And it's magical because it literally adds income on paper to your qualification. So if I qualify for a $400,000 house on my own, with the rent of the other units, I might be able to qualify for $500 or $600 or $700, depending on how much the units will rent for. It's the lower of the appraiser's opinion of what that market rent is if it's vacant, or it's whatever it has been rented for as evidenced by a lease agreement. But you get to use basically 75% of that. The 25% difference is you're going to have occupancy, you're going to have some vacancies, some expenses. So they want to, that is a great feature of buying multifamily. I can actually own more real estate.
Mm-hmm. And for using it with your VA, there's two ways. So it's or, as it's written in the VA guideline, that you either have to have 2 years of landlord experience and not necessarily multifamily. Say you have another house in Oklahoma that you're renting out, as long as you can show that you know how to manage, or hire a professional management company and to be able to utilize that 75%.
Yeah. There's a little bit of underwriter discretion here, and in talking to my underwriter about this in preparation for today, they can also appreciate if somebody has some experience around construction or around working real estate or around even just owning a home and having to maintain it. And so I think that, it'll be a letter of explanation. It'll be a case to be made that, hey, I have some familiarity around homes, and I am not just coming in from having never owned anything before. If it's your first time and you don't have any experience in anything related to real estate or home or property management, then you can hire a property manager to hire the other units, which could even be a good idea anyway, just to sort of learn the ropes before you try and figure out how to screen tenants on your own and what, lead disclosure Washington requires, and lead-based paint disclosure,
Mold disclosure.
all those things.
Yeah.
And I think that good property management sometimes can even pay for itself, because sometimes we as landlords are too nice, and a property management company will hold the tenants to account to pay on time. They'll keep the rents at market, not what feels nice for you to charge the tenants, so.
They also understand like the laws, the local laws as well, because it's their job. Like I know right now Tacoma passed that Measure 1 this last year where, for kicking people out and raising rent and everything else became like this weird thing. So if you're looking for an investment property, Tacoma, people are offloading them right now. So you're getting really good deals.
A lot of questions around the new Tacoma legislation. Thanks to our, it was a piece of legislation brought about by some sort of tenants' rights activists, and they have essentially made it really difficult to evict someone. And the courts haven't really had cases come through yet where we see how this is going to play out, but it gives tenants a lot of reasons to not pay rent and still stay in the house. An attorney told me that the law was written very vaguely, and it was written kind of with the billionaire landlords in mind. That's how they promoted it to the general public who voted on it. But some really high percentage of single family rentals are owned by families, people.
Correct.
Mom and pop. I can't make that payment if I'm not getting rent. So we'll see how it plays out, but
for sure. That's a different video.
That's a different video.
We're going on some tangents. What are your success stories with working with veterans, getting them into a multifamily?
Yep. So tons of duplexes, tons of ADUs, a couple 3 and 4plexes over the years. We had one just home run that a loan officer in my office closed when rates were at rock bottom, and a guy bought a 4plex for north of $800,000, and his rate was so low when rates were really low that he had the other 3 tenants were fully covering the payment, which the math on that is a little harder now. I have some tools that'll help buyers figure out, okay, what's my total payment, what's my total rent receipts, therefore what housing payment am I left with? And I think the good news is that if somebody ran it now, they would be well under their own BAH, but if it was in a really low rate environment, it becomes possible to have your housing payment totally covered by the other 3 units. And then when you exit that property in a year or 2 or whenever, you have a cash flowing real estate investment forever. Yeah.
And talking about occupancy, when you were just mentioning it just reminded me, is when you purchase with your VA home loan, regardless if you're doing multifamily, you have 60 days to do permanent occupancy, and you have to plan on living there. And I do this, but you technically, by the VA guidelines, you have to be there for a year.
Yeah, the occupancy affidavit says I'm going to move into it within 60 days, and I will plan to be there for the next 12 months.
Correct. We pulled up in preparation for this, and this is the whole reason why I was like, we got to get a video on this, is I had pulled up a quadplex in Auburn that was for sale for $900,000, and I bet you the viewer is probably going, $900,000.
Yeah,
like, that's a lot.
Yeah,
but when we looked up the average rents were $2,300, and you pulled out your little handy dandy little tool,
my nerd spreadsheet.
Yep. You entered in all the numbers, the taxes, occupancy rate, what today's interest rate was.
Yep.
And I believe we came up with, when you owner occupied it, how much was the payment?
I want to say that we were if I was occupying one of those units with a VA home loan, I would be responsible for like $800 or $900 after the rental income came in.
Yeah. Which, can we get right now anywhere to rent for $800 or $900?
No.
not at
a lean-to shed.
2009 prices
here. Yeah.
So I think that there's so many opportunities, and I'm always pulling opportunities, even if it's something that it seems expensive. Like you wouldn't be able to afford it on your own if you were buying a single family, but yet then now you have an opportunity to be paying way less. Like personally, I just purchased an investment property. It's not considered a multifamily. It's considered single family with an ADU. The basement was converted. I bought it for $435.
Wow.
And my mortgage is $3,000, but my tenant pays $1,650.
Yeah.
So I'm actually paying less than what I was paying for my rent prior to coming into this house. And so that's one of the big things that people have like, how am I even able to afford with these huge interest rates?
And when you move out, what are you going to be able to rent the portion that you're living in?
About $2,400.
So total,
so it's a bigger.
Yeah. So total, you'll be at $3,600 or so. Yeah, you'll be positive cash flow. And over time, there's 4 things that make real estate investing amazing. Number 1 is the cash flow, and that increases over time because the mortgage stays the same or even goes down if you're in an opportunity to refinance down the road, which should happen at some point. And then the rents don't. They keep going up. So the delta of cash flow keeps growing exponentially over time. Number 2 is the tax advantage, because you get to, if I own a piece of real estate that is an investment, I get to deduct the taxes, the property, insurance, the interest, the property management costs, any maintenance, marketing expenses, and then the big one is I get to depreciate it on paper, the approved value, which is an on-paper loss that it becomes really helpful from a tax standpoint. Number 3, the tenant's paying my mortgage down, and that's not going to change your life in any given month or year. But over 10 years, that could be, $60,000, $80,000, $100,000 of equity that your tenants paid your mortgage down. And then the last one is obviously appreciation, which, on a $430,000 house, 5% a year is like $21,000. So you're almost $1,500 to $1,800 a month just in what the property's going up in value, and that's conservative.
That's conservative. Well, and the whole thought process here is to rinse and repeat. I have to use it. I have to live in it for a year, and then I'm going to use the rest of my entitlement because I've only utilized $435 and stay in Pierce County, which I believe our entitlement is $950 or something. So then I'll be able to use zero down. Now let's kind of talk a little bit more about that. I know that there's a mathematical equation that you have to use, and it's a case-by-case scenario with the individual borrower. But an overview, I'm holding on to this property forever. It's going to be part of my retirement plan, and I'm going to be purchasing something next year when I'm technically allowed to rent out that other unit and go purchase something else. Where am I standing at with my entitlement?
So let's just use round numbers. If you bought something for $400, that would mean that 25% of that home value is being used on your certificate of eligibility, so $100,000. And it's dependent on county, but in Pierce County, like you mentioned, we have one of the highest in the country, and it's almost $1 million. It's $977,000. So let's just say by next year it'll probably be $1 million. So I'll just use $1 million. That means that you have $250,000, $250,000 total. You've used $100,000, so you have $150,000 left of entitlement. That means that you can times that by 4 to get your zero down limit. So that's another $600,000. Another easy way to think about it is 400 plus 600 is $1 million. And then over $600,000, let's say you find a place for you go zero down to $600,000. Let's see if you find a place for $700,000 that just checks every box. You only have to put down 25% of that overage of the amount that you're over. So of the $100,000, you'd have to put down $25,000, which on a $700,000 place, $25,000 is less than 5%. It's like 3.5%, 4%. And so you can once again do another VA loan, no mortgage insurance, even above your remaining entitlement. Most people don't realize you can use it again, and most people don't realize you can go past your remaining entitlement. You could get infinite amount of VA loans if all of your entitlement is used up and you always just put 25% down. But in these high cost counties, a lot of times people have a lot of entitlement left.
Yes,
which is cool.
Correct, which is absolutely incredible. What are some of the other benefits of the VA home loan that you mentioned? Like, what about if, because I'm 65% service connected, let's talk about service connection. Let's talk about PMI. What are those terms?
Yeah, so private mortgage insurance is true about most home loans that you're not putting down 20%. VA never has any PMI, no monthly cost to putting down less than 20%, which is amazing, which is one of the features of VA home loans. They're also less credit sensitive than other loans. They're also more kind of resilient to debt to income for whatever reason. Maybe there's income you can't use, or maybe someone has a limited amount of income because of something going on, or they don't not forced to pay off debt that other loans might force you to pay off in order to qualify. So in terms of the gateway to qualification, VA is a pretty wide road. They also will waive, the only real fee that a VA loan has that other loans don't is the VA funding fee, which whenever your disability rating is more than 10%, you can have that completely waived. So the VA funding fee ranges from 1.25% to 3.3%, depending on how many times you've used the VA and how much you're putting down. But there are instances where having a service-connected disability can save you $12,000, $15,000, $18,000. The VA funding fee is not paid in cash; it's rolled into the loan. VA loans are so it's nice to waive it when you are you have served our country and earned a disability and rating, and now you save money, and that never changes. You continue to save that. There are also VA loans. You can actually buy a VA loan with a non-veteran that you're, obviously if your spouse is a non-veteran, that's fine, but you can also use a VA loan when you're not married to your co-buyer, which most people don't realize that either. It effectively becomes a 12.5% down requirement, because the VA covers zero down for your half of the house, and you need to come up with your 25% down on the non-veterans half of the house. So overall 12.5% down, but that's a cool feature. You also, VA loans are really easy to refinance. The VA Streamline makes a refinance a dream, no appraisal required. The costs are less than other types of refinances. There's a ton of benefits. VA loans are assumable. Other loans are not, where someone could assume your debt.
Well, let's talk about assumables, because of the fact that there's a situation that I'm aware of where the realtor said, "Oh, we're in a big base situation. This loan is assumable. It could take some time. There's logistics with that." But it was a non-VA borrower that assumed their loan. And so the consequences of that is it's tying up their eligibility.
Yeah.
And we go back into talking about, when it comes to zero down, we're talking about county limits and doing that mathematical equation.
A veteran who has a VA loan would need to be compelled to allow a non-veteran to assume their mortgage, because it will permanently, or until the loan's paid off, encumber a portion of the entitlement. And to some veterans, that's not going to work, because they need all of it to buy the next house. For others who maybe are also eligible for other types of loans, and if they're getting a decent premium on their home sale for that feature, which they should expect, I've seen veterans who have made the calculation that, like, all right, I still have some entitlement left. I'm getting a great price on this house, but that's important to know so you can make an informed choice.
Yes, and that's just a cautionary tale, because this veteran had no idea and was like, "Why didn't anyone tell? Yeah, I got more money, but no one told me, and now I'm going to a place where it's way more expensive to buy.
Oh yeah.
And I need that entitlement." Now, if it's a veteran to veteran and a veteran is assuming it, then the entitlement goes to them. It's just if you are, doing the assumable loan, giving it away, and a non-veteran comes to borrow.
Our next video, assumable loans.
Nice. There's a lot to go into it.
Yeah.
A lot. I hope you have at least 4 months to be able to sell.
Right. I think the biggest opportunity with using your VA benefit for multifamily is just the incredible amount of wealth that you can build over time. We ran it on that property the other day, and I think between cash flow over time, appreciation of the property, tax advantage, and mortgage amortization, thanks to the tenants, it was north of $500,000 over 10 years with conservative assumptions that in wealth that veteran would create, totally separate from the income they earn, totally separate from other investing that they're doing. Just that asset that, when you move out, now pays for itself and gives you positive cash flow. And you imagine, fast forward 30 years, if you have a fourplex in a market where we don't have enough houses, where real estate is a scarce resource, and so it will go up over time, and the cost to rent it will go up over time. At some point, I have a paid off house that pays me 10 grand a month or 15 grand a month. 30 years from now, what will rents be? It's like having another salary job, just not one that you ever have to go do or deal with their boss.
Hire a property management company, they get 10%.
Yep.
And now you really, unless something happens where it burns down or something crazy.
Yeah.
But that was like that. The one that you were just talking about was the one that I pulled up during the time frame that I wish I would have known while I was active duty. This is the long game. This is not a get rich quick scheme. This is diversifying your investment portfolio. Everyone talks about stocks. Everyone talks about the S&P 500. Everyone talks about those things, but a lot of people are really scared to invest in real estate. And I think that if you're a veteran or active duty and you're thinking ahead of, okay, I'm putting money in my TSP, I'm doing X, Y, and Z, I need somewhere where I need to live. I was just thinking about getting an apartment. Well, why don't I consider getting a multifamily if I can qualify for it to build my retirement later on? So when I do get out 10 years, 15 years, even 20 years, I'm not having to go get another job.
Right.
I'm not having to go do whatever because now I've rinsed and repeat and I have one at every single base.
Right.
I have, I PCS'd 5 times. Now I have 5 quadplexes or even 5 whatever. That's
big time wealth creation.
Yeah, that's a big time wealth
Plus,
creation.
you have a natural tenant pool and natural turnover that lends itself to being a really quality real estate investment. You know that you're gonna oftentimes not even need to advertise for a tenant. You know that what they get paid. You know that they have to make their rent payment, and you know that you're gonna always have, the base isn't going anywhere. And we know from what's happened at JBLM that housing is short. You can probably speak to that better than me, but there's not enough units for the amount of people
to live on base.
Right.
Yeah, definitely not. And they take your whole entire BAH. Here in this opportunity, you're pocketing some of your BAH because those other tenants are paying down your mortgage. So now you have more money in your pocket to go get tattoos and go drink and do all the things that you want to go do. Or invest more into an S&P 500.
Or invest in a diversified manner to an S&P 500.
It hurts to look back and go, oh, the asset would be, I would not liquid cash, but basically have $500,000 to my name. And if I would have continued rinsing and repeating, I wouldn't be making this video with you right now. I would be
on
in the
yacht.
Caribbean somewhere, living the dream of the retired life at 36.
Mailbox money.
I wouldn't be here hustling, trying to tell all of you guys to go purchase multifamily. I mean, even when would it not be a good time to a good scenario for someone borrowing to do a multifamily in a better single family? What?
I mean, I think the things that you have to be careful about is, number one, make sure you have an incredible real estate professional like Whitney who is helping you make smart decisions about what a property is worth when you offer on it, telling you no when something seems okay but isn't the right fit, negotiating on your behalf for the best price on a property, helping you vet the kind of rental market that you're going to be looking at, help you run the numbers on, an advocate who is going to help you through this process, is going to ensure that it's a wealth creation tool for you and not just a home sale for them. You're going to get it inspected properly with a great thorough inspection. You're going to the VA will make sure it appraises so that you're not overpaying for it. You're going to have adequate insurance so that if it did burn down, you'd get a big old check to rebuild it. And then on the financial side, I think I really like that kind of requirement to have some reserves, because that's a good idea anyway. Knowing there was, when the market crashed in 2007 and 8, and real estate prices were really inflated because all you had to do was fog a mirror one day out of jail and you could get 3 home loans 0 down, and they were ARMs or negative amortizing or interest only, like really dangerous, foolish mortgage products that our industry gave to the world. And then that didn't go well. So prices collapsed. But the people that owned a lot of real estate who also had cash, they were sitting really beautifully in 2012, 13, 14, because if I could endure some difficulty, I see my property value on paper go down, and we don't expect this market to be anything like that one. But those that have cash can weather some storms. A tenant that's maybe having some difficulty, or an unexpected roof repair, or something outside. Explodes. Yeah, totally. Something outside, a medical bill, or a carburetor in your car that goes haywire. So you need to have some reserves so that you can weather that stuff. And over time, if you can sort of have the reserves and the financial wisdom and liquidity to sort of make it through the uncertainties life throws at you, these investments will always work well. The people that really were in a rough spot were those that couldn't endure a couple vacancies, or couldn't endure something difficult to the property happen, and they just had to walk away and foreclose. So if you do this right, if you save up until you have the right amount of reserves, and you really trust a professional agent to help you navigate what's out there, what options are, how to find a great opportunity, how to evaluate, how to offer, get that thing signed around, walk you through real estate and property management 101 to make sure you're putting yourself in the best position with great tenants. It is a absolute home run. Every other type of loan makes you put down a bunch of cash. Some types of loans, like FHA, have some weird extra underwriting that makes it hard to buy them because of how they underwrite the income of just the property itself, separate from you. And so VA doesn't have that. And as long as you income qualify for it, it is a fantastic way to buy multifamily with no money out of your pocket.
Awesome. One last thing. When it comes to applying and doing everything with you, say that they need to work on their credit, say that they need to do, what kind of services could you personally provide?
Yeah, so I encourage buyers, just get, or just people that are investigating buying, get all the facts on the table, getting a look from a solid a mortgage professional doesn't cost you anything. It doesn't commit you to anything. It's just, what can I do? What can I not do? What will put me in the best position to do what I want to do, and how might I start that? Maybe it's credit, maybe it's paying off some stuff, maybe it's really targeting the type of property that will make sense. Okay, I wanted to buy a 4-plex, but until I get a promotion and another year of service, that's not in the cards where I live. So how about a duplex or a single family with an ADU? And just to know. I think a lot of people just don't really do the work to kind of have all of that investigated for them, and so they don't really have a plan, and 5 years goes by and you haven't built any wealth through real estate. So
yeah. So basically, if you are thinking, hey, this really resonates with me, this is really interesting, I just don't know where to start, I'm going to put his link below in the video, or it's going to be in my Stan Store if you're watching this on any other social media, that you can go apply, and you can do a soft credit pull and basically be like a little mini financial advisor. Mm-hmm. Like, hey, your goal is to buy, your goal is to do this multifamily. Let's really dive deep into your finances, and let me give you a plan. It might not be tomorrow that we're going to get you pre-approved. It might not be next year where we get you pre-approved. It might be a 2 or 3 year plan, but you're always going to be fostering them. he's always going to be basically like hand holding you through this to make you achieve your goals. It's just not a quick, I want to get rich. If you don't qualify now, bye, I'm never going to see you again. You really do foster those relationships.
Yeah, my family is amazing, but we grew up in as tenants in a duplex. So my parents didn't own a home until after I was out of college, and I think it's because no one took the time to educate them and help them and know that they could have done it. And just to think about the amount of wealth paid to landlords over that time, it makes me really passionate about that education piece and helping people understand what do I need to do to get into a position where real estate can change my financial future. And that's a really fun endeavor once you decide, okay, it's worth investigating this. Let me just at least see where I stand now. What would it look like? Maybe get approved for some amount and then work towards a higher amount. But at least you know.
Definitely. Leave a comment below if you learned something. If you want to learn more about the VA home loan, we're going to be doing these videos very often. I'm going to be trying to interview people who have actually done multifamily homes with their VA home loan, and we'll go from there. Have a great day.